Hi guys, today is 15th June 2025. Um, so I'm just going to take a look at my current account and also the my potential trade strategies for the next week, month, even possibly till the end of the year. So I've been trading Euro USD quite a bit and a bit of oil. I've traded a bit of USD JPY, a bit of this USD Mexican peso, and not any gold in the past few months. But yeah, if you can see my positions on euro dollar, I've actually closed them out. In hindsight, yeah, I should have kept a couple of positions open. But since this is just a $500 account which I've opened on MT5 for the purposes of YouTube, I have actually closed most of my positions as I don't want to, leverage too high and also keep my risk low. So I have taken a few transactions. By the way, this volume being one, it's not really one lot. These are all micro lots. Let me give you an example. So as you can see, it's written there M. So if I take a look at the properties on this, you'll see a contract size over here reflects just 1,000, a contract size of 1,000. So that's 1,000 euro equivalent to at the moment 1.15. So $1,115 roughly. So it's a micro lot. And what I trade is the minimum it allows me to trade is point zero point one of this. Um, let's take a look. Yeah, point one. So even if I try and reduce it, it's point one. So it's actually every transaction the minimum transaction I could do would be $100 equivalent. So that's like point zero zero one of a lot. Am I right? Yeah. So I've been trading um, point 0.3 typically, point 0.3, point 0.5. Bulk of them have been off late have been point 0.3, point 0.2, point 0.1, just to minimize my risk and sort of um, dollar cost average on these positions. Um, so if you look at what's happening with the charts, let's take a look at Euro USD. Oh wait, let me take a look at what are the charts? Yeah, Euro USD. So there's still some news coming out, but the reason I closed out most of my positions just before the geopolitical events that's happened between Iran and Israel, um, what I've done is I wanted to mitigate my risk, reduce my risk basically, and I closed out most of my positions around this level, I would say 1.14 to 1.148. I could have held on, maybe kept a position open, but I just wanted to exit at that point. I know it's always good to let your winners run, but I was just a little concerned because typically what happens in times of risk, any kind of risk, what's this? Yeah, anytime, anytime there's geopolitical risk that's involved, dollar gets stronger, at least in the short term till people figure out what's happening uh, geopolitically and also how countries are responding to those and even investors how they're responding. So I feel that there could be some dollar strength in the next couple of days or even possibly even a week. So maybe I've lost out on some profits over here, but I would still say I would rather wait and lose out on some profit rather than the market drop to maybe 1.10 or 1.11 or even 1.12, and then I'll be like kicking myself thinking, oh, I should have just closed my positions or I should have waited. In any case, since there's been a big move over here, there's been a big jump from 1.14 to one. Actually, even one, if you can take a look from here, it's like 1.13 in the past, 1.11 in 3 weeks. So there could be a pullback, and that's where I want to enter. So I've kept some positions open. Let's take a look at my, not positions open. I've kept some buy orders in place. Trade, yeah, I've kept some buy orders, all small positions, um, at different levels, sort of to dollar cost average. I know some people would just wait and put in, a big position at, let's say, 1.13 and another maybe 1.11. But yeah, I prefer this kind of strategy. This works well for me. And oil, I had a couple of positions open. So let's take a look. I had closed some positions, symbol oil, which I could have made some really, really good money on. But yeah, hindsight's always 2020, right? So I did do decently well in some of them, but yeah, I actually had the right idea here, 69 as a take profit, but yeah, I just got a little too concerned with Trump's tariffs and things like that, so I closed them out. In any case, we'll wait for a good entry at a later stage. Yeah. So period, let's say last 3 months. All right. So I walked or I started this account about a little over a month back when I started this my YouTube videos, and I credited the account with $500, as you can see here, and I've got a decent profit of 74. So it's actually quite high. If you calculate 74 divided by 500, that's about 14.8% in about a month, which is quite high. So I wanted to reduce my exposure as well because if I'm making that kind of profits, typically it would, for a professional trader, they would call it over leverage, and I would say so too. So I don't want to take such high risks in the future. So rather than chase the price, I'm going to look at I'm going to wait for pullbacks on the euro USD and then enter. So maybe this is going to just keep going up and up and up, and then I'll just have to wait to buy back maybe at even 1.16. So let's wait and see over the next week or so, and let's see what's happening with the market sentiment. That's what the retail traders are doing. Let's refresh it just to make sure I'm on the right page. Yeah, so I use FX book, my FX book. It's um, it's got quite good resources, and it tells me a lot on what the retail traders are doing. So, for example, Euro USD traders are net short, which they could be right for on a short term, but with Euro USD so bullish and USD interest rates, they definitely are going to reduce interest rates this year. We just don't know when. I wouldn't be short Euro USD, although I would expect this week some drop in Euro USD. So I hope you understand what I'm trying to say. Um, I want Euro USD to go up, but I feel that Euro USD might go down for the next couple of days because of the uncertainty with the current war in the Middle East. So retailers could be right on this, but knowing retailers, what they're going to do is they're going to close positions the minute they get into a little bit of profit, and then they would take more positions, and then Euro USD could move in the other direction. That's what typically happens, and then most retail traders end up being over leveraged. So if you can take a look at this, you see there are quite a few traders who are short at 1.11. So they're just holding on. It's like a Holy Mary. 1.11, and the current price is 1.15. They should have closed out the positions, but I guess maybe they're not so over leveraged. But I don't know why they would think that the Euro USD would drop under 1.11 given the current situation of tariffs and potential interest rates dropping. So GBP USD, again, people are net short at 1.30. Yeah, dollar could strengthen back to that position. It is a possibility. USD JPY it was something that I was interested in, but seasonality, um, I'm a little confused about the seasonality of this. So I think I'll just stay away from USD JPY for now. When I'm so confident on Euro USD, I'd rather stick to Euro USD and even GBP USD for that matter. What else do we have here? A USD Mexican peso was something that is or was interesting to me. I was short USD Mexican peso because I was getting a swap fee. Sorry, that was funny. I was getting a paid a swap fee just to hold my short positions. So, and as you can see here, most people are long USD Mexican peso. That's really strange. It would tell me to get in a position, but it's not the right time to get in because it's already at its low for the past few months. But it might be interesting to get into a position maybe next week or whenever there's a pullback or a substantial pullback. So let's wait and see. So I'm not in a hurry to get into any positions at the moment. I know most people what they look at is, or even me, the way I used to trade is like, oh, I need to make $100 a day or $1,000 a day, and then if I'm not trading, basically it would feel like I've lost money, or I need to pay for my expenses, I need to pay for this and that. So I was pressured to always trade every day, but then over the years I've realized that it's better to wait for an opportunity and then get in. It might be a higher price from what it is at today, like Euro USD today is at 1.15, but it might make sense to even get in at 1.16 or 1.17. It all depends on the situation and the market and what the Federal Reserve plans on doing in the near future or even in the distant future. So, and if I'm not over leveraged, I can hold on to even any position that I have. But if I've over leveraged, that's when panic sets in, and then you make hasty decisions. Then you might start shorting something which you're actually bullish on, and then you're all over the place. Then you're closing the short position, then you're closing the long position, then you're taking another long position, and you just go crazy. And then you're trying to top up your account because you have a margin call or your account could get blown. So it's very important to figure out what you plan on doing and make decisions. Enter not because you have cash in your account or because you got a funded account or you have an investor on board. Wait for positions. That's what I would do. Anyway, this is purely for educational purposes. I'm not telling you what I plan, what you should do. This is my strategy in the near future. Another good resource to look at is the Commitment of Trader reports. This website actually is a good it's a good front end, so you can quickly take a look at you know the COT legacy reports and just click on the currency that you like. That's an ad, and then just go down. So the non-commercial bit here, that's the institutionals. So the long contracts 111,076. They've gone up plus 7,000, and the short 59,442. So this sort of tells me that institutionals are long British pound. So if you're trading British pound with relative to another currency, take a look at that currency and then make a decision based on that. So here they've reduced their shorts and they've increased their longs over the past week. And you can click on this historical data, go back 1 week, a month, a year, whatever you're using as your reference points. So if I'm trading British pound to, for example, JPY, then I'll click JPY, and here it's gonna show me what. Oh, my cat's going crazy. Okay, so and then it's gonna show me what the um what institutions are doing with Japanese yen. So here they're still long, 184,000, but they've reduced the positions a bit and increased the shorts a bit. Um, so it's not the best symbol to trade at the moment, British pound, JPY. So similar to that, I'll look at all the currencies and then decide what's the best thing to trade for that week. And then there are other um, resources you can use for seasonality. There are a few traders, professional traders online, and you can watch some of their YouTube videos, but don't take trades based on that, but look at the resources that they use and study them, or even backtest based on all these things. And there are a lot of traders who use moving averages. There are traders who use seasonality, market sentiment, and usually market sentiment, the way we use, or at least I use this resource, is if I see retail traders heavily long or heavily short one, I would take a contrarian view to that. And if that aligns to my strategy or my bias of being bullish or bearish, then I would take those trades at a pullback. I hope you understand. I'll probably take a trade in the next week and do it live, so you guys will get an outlook on how I've been trading. All right, guys, that's it for today. All the best with your trades.